Welcome everyone. मेरे साथ हैं Dinesh sir, who has so kindly agreed to give us his time and learn from him. Sir, of course, the topic of the day that's on everybody's mind is budget. अभी आया है. Final prints have just started to come out of the budget, and market has also been accordingly reacting. पहले थोड़ा सा redishness peak saw in the markets, and now it's happy day again as we are recording it. What's going on? Or what is your outlook on the budget and on the markets right now?
Yeah, normally we have this saying internally that budgets do not really matter as much from an investment perspective. Because when you think about it, the government works throughout the year. They formulate and execute on their policies throughout the year. So one day of the year should not make that big a difference. While obviously in certain cases, they might make big policy announcements. For example, in this budget, there was announcement on the capital gains front, and that does have certain implications. But in the grand scheme of things, when you think about investing in companies, how much is it really going to matter? Probably not so significant, right? And so from that perspective, I do not place too much emphasis on budgets, to be honest.
Right, sir. That's good to know, sir. Talking about the markets, we have seen a very sharp rally in the recent few months, of course, we are sitting at all-time highs, which are not uncommon, by the way, but still the rally has been sharp, which has got some people in the jitters. Maybe they are overvalued, maybe they are not. At the same time, I think the recent economic survey also talks about our market cap to GDP being its lifetime highs as well. So, what is your outlook on the market and the valuations right now?
I mean, there is no doubt that valuations are high. I mean, regardless of how you slice it, you can look at it from a market cap to GDP perspective. You can look at it from a price to earnings perspective. You can slice and dice in multiple manner, but valuations are expensive. The only question you have to ask yourself is valuations don't operate or happen in a vacuum. It goes hand in hand with earnings, because all said and done, when we think about individual companies, right? When a company is growing at a faster clip, all else being equal, you would assign higher valuations and vice versa. So right now, the other important question to ask is, yes, valuations are high, but what is happening from an earnings perspective? And there, thankfully, the story is more positive in the sense that for many of the cyclical stocks across these cyclical sectors, the earnings have only recently started improving. When you think about how these cycles normally operate, it looks like we are probably somewhere in the middle point of the cycle where you've seen one leg of improvement, but you can easily imagine another leg of improvement. And from that perspective, the earnings picture definitely looks more rosy. And so while valuation is an issue, and when one thinks about investing, one shouldn't count on further re-rating of valuation multiples. But what one can expect is still return, which is basically in line with the earnings growth, which at this point is actually doing much better than what we've seen, at least in the last 10 years, essentially.
Absolutely. So thank you so much for that insight. Talking a little bit about the sectors that are going on or the themes that people are thinking about in the market right now. I think let's start with some of the themes that have given us a very sharp rally in the recent past. Be it defense is one sector. I think PSUs as a theme have run up a lot. Then we have power sector, which has also given some really good returns in the recent few months. Do you think that's gonna change from here on, or there's some steam left in these sectors?
Right. So here, first of all, I think you really have to go on a sector by sector basis, and then you have to think about individual companies also. If I think about a sector like power, yes, the sector has delivered good returns, but the question you have to ask yourself is today the aberrant valuation period, or where they were 3-4 years? That was the real aberration. In my opinion, a lot of the reason why these stocks and the underlying sector has given good returns is that 3-4 years ago, valuations were so cheap that you just needed to believe that there will be some earnings growth, and that was enough to make it worthwhile and to give good returns. And so part of the reason why these stocks have done well is the starting point was so attractive. Yes, valuations now are probably higher than historical averages, but if I have to rank sectors on the basis of degree of overvaluation, I wouldn't put power at the top of the list. In my opinion, the earnings outlook still looks good, and valuations, while they are higher than historical averages, compared to many other sectors of the market, they still look rather reasonable. That's my view with respect to power. On the other hand, when I think about a sector like defense, there, at least personally speaking, I find it really, really tough to justify the valuation that they are trading in. There, I agree that the earnings picture has definitely improved. The order inflow, the order book activity, even the margins have improved. But there, I would argue that the degree of re-rating has been too much too soon. And from that perspective, it is, at least for me, it's very difficult to justify the valuations of stocks in that sector.
Right,
Again,
right,
when
sir.
you also talked about PSUs, PSU itself is a heterogeneous basket.
Yeah.
So when you think about even PSU companies in the defense space versus PSU companies in the power space or PSU companies in the energy space,
Yeah.
it's very different. So I wouldn't like to think of PSUs as just one homogeneous basket. There are going to be PSU companies that I don't want to invest in at current valuations, and there are PSU companies that I feel quite comfortable investing in at current valuations as well.
Right, absolutely, sir. Let me talk about another heterogeneous basket, which is agriculture as a theme. I think fertilizers to rural, infrastructure stocks. There are a lot of sectors in this theme itself. And given this budget, I think a lot of people are getting bullish because a lot of allocation has gone into the agricultural development or rural development. Is there a way that how can retailers participate in this growth story? If you can tell us, sir.
Right. So one, it's not just about this budget per se, but what is also happening is that when you think about state policies, at the margin across states, the allocation to welfare-oriented schemes has gone up, right? And a lot of the beneficiaries happen to be in rural areas. So from that perspective, even states are getting very much oriented towards providing more welfare to rural households. So that's definitely a positive tailwind. When I couple that with the fact that monsoon situation this year appears to be better than where it's been over the last few years, that's another positive tailwind for the rural economy. The third aspect is when you think about inflation, inflation has been a problem for the lower income households from a discretionary spending ability perspective. And that again, the good news is that inflation seems to be coming off. So when you put it all together, it appears as if the rural economy now has all the right ingredients to make a comeback. And so that's the bet that I would want to make, that the situation going forward is going to be better than what it's been like over the last 2 or 3 years, essentially, right? Now, in terms of how do you play this theme, you have the most obvious usual suspects like the fertilizer names, but you have to be careful in terms of the type of companies that you want to back. Because all said and done, even when you are very positive on a theme, you always have to be choosy with respect to the companies that you want to buy. Because not all companies in a particular theme have the right corporate governance practices or even have the right business model. So obviously, you have to be careful in terms of which companies you want to invest in. But with that caveat aside, fertilizer names inherently look attractive, at least from a cyclical perspective. Though over longer term timeframes, they've had a very volatile and turbulent history. But at least from a cyclical perspective, if I have to think about the next few years, they definitely look attractive. Even when you think about consumer-oriented companies that are catering more to the lower income strata or catering more to the rural economy, there are many such companies, and they are also likely to benefit as the discretionary spending goes up in the rural space.
Absolutely, sir. So I think another sector which people have been kind of unable to decode the message is real estate sector, wherein on one hand the indexation benefit has gone, and at the same time they have reduced the taxes on long-term capital gains tax. So and on the budget day we saw a good tumble in the realty stocks as well. So what is the story that has finally played out? On one hand, there's some benefit, and some benefit has been taken away, but we saw some reddishness in this sector.
Right.
So how has it played out?
Yeah, obviously it's been a mixed bag. I don't think it was a huge negative because as you mentioned, the rate also has been brought down. So depending on the assumptions that you make for the return that you can get from a real estate investment, and also the time period that you're thinking about, right? The permutations, combinations, depending on how you put it, it can actually move to the positive direction as well. So from that perspective, it is not an outright negative, in my opinion, particularly for someone who is thinking about investing today, as opposed to someone who invested 15 years ago and who is really worried about the lack of indexation benefit, essentially. So I don't think it's that big a negative as what certain people are making it out to be. Now, when I think about real estate stocks, one problem has been that they also have done very, very well as a pack. And to that extent, they were quite overrated, so to speak. And so, in some sense, they were begging for a correction, where you wanted some sort of catalyst to bring down valuations to a more reasonable extent. And so, this was so in some sense a catalyst to bring down valuations. But if I have to think about the outlook from a medium-term perspective, from a 3 to 5 year perspective, I'm quite positive on the real estate cycle. In my opinion, normally when you think about real estate cycles, they end with a huge investor component, with people trying to flip their homes in a matter of months and so on. Are we really seeing that across the country? The clear answer is no. Barring maybe one or two micro markets, we are nowhere close to that level of euphoria. For the most part, the demand is true end user based. And not every single market out there is seeing very strong price appreciation. So I think we are still in the early to mid innings from a real estate cycle perspective. And so I continue to be positive on real estate names in general.
Absolutely, sir. Those were a lot of great insights, sir. But before we let you go, can you give us a final concluding piece of advice for our viewers out there that it may be related to this budget or in general that they must always follow?
Yeah. So there is this obvious question that a lot of people ask. If they haven't invested in equities in the past, is this a good time to invest? Right? Yes, valuations are a problem. But what I'll say is this: if you look across time periods, as long as you have a long horizon, and when I say long horizon, I mean if you have a 10-year plus horizon, for example, it doesn't really matter when you get in. Even someone who got in the worst possible time, for example, January 2008, just before the great financial crisis, right? That was in some sense one of the worst possible times to
Yeah.
get into equity markets. Let's assume that person held on to their investment for a 10-year period. They still were okay at the end of the period compared to almost every other investment out there. That tells you the wealth generating ability of equities, right? So one aspect to keep in mind for anyone who's thinking about investing in equities is, one, it is a long-term horizon product. Two, it pays to have the long-term horizon because the returns, if you look at any rolling 10-year plus period, the returns are much better than almost every other investment avenue out there. From that perspective, if you haven't invested in equities, you should definitely consider doing that now. One way to smoothen out the volatility and take care of high valuation periods is by potentially doing something like an SIP, right? Where you sort of invest a nominal amount each month. That way, you are investing at certain points which are probably not so conducive from an investing perspective, but that is going to be averaged out by investing in certain points where it really pays to sort of invest in equities. That way, you're going to average it out, and the returns over any long-term time frame is definitely going to be good. So I think if someone hasn't invested in equities at all, um, as long as you have a long horizon, and when I say long horizon, I'm talking about 10-year plus horizon. If you're doing SIP or something like that, you're going to be fine investing in equities. Even for people who care a lot more about downward volatility, they are inherently very comfortable with like 15% correction or 20% correction, which happens, it does happen like at least once or twice a year in equity space. One way to mitigate that risk is you can consider hybrid funds, where you have a mix of equity and fixed income product, and that doesn't give you as much upside, but it definitely does a better job on the downside. And again, when you compare it with alternatives like FD, you probably are going to be in a better place as long as you have a medium to long term horizon. So that's one message that I would like to give, at least for the new investors out there.
Absolutely, sir. This was very, very insightful, sir. Thank you for your time, and I hope you'll allow us to learn more from you in more sessions like this.
Great, yeah, great. Thank you so much.
Thank you for your time, sir.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.